Hi everyone, and welcome to actually the 100th video on the channel. So again, I'd just like to take the opportunity to thank you if you've watched any of the previous 99, and to everyone for all of the likes on the videos, the great comments and thoughts on the topics covered, and to those who've subscribed to the channel. It honestly means a lot, and I hope to keep building from here, putting out more videos for you. And just a quick reminder that I will be changing the name of the channel soon, as I have mentioned previously in a video that I'll include a link to here and in the description. So putting that to one side, having done 2 videos recently on why I am bullish about crypto, in this video I wanted to look at the counter argument to that and look at why some people are fearful in today's markets and are stating really that the US is either already in a recession or heading for one before a large bull market potentially comes. Or will we just experience new large all-time highs next? And this video is meant as education and providing facts for you rather than just giving lots of rhetoric and FUD, which you do find unfortunately in some videos. Because a lot of things have an impact on the cryptocurrency market, other risk assets, the stock market, etc. and therefore the returns on your investments. And as we know with economic cycles and markets, it's normal to go through dips and corrections to then come out the other side. And I did a video specifically on economic cycles if you want to check this out. You can again find a link to this here and in the description. But the important thing I believe is to always educate yourself before making those investment decisions. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a reminder, you can contact me if you're looking for crypto coaching. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Myna, and I'll leave a link to contact them directly in the description to this video. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage that's out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5. Just a reminder that nothing contained here is financial advice, and let's jump straight in and look at what the data says about any potential recession that's coming our way. Firstly, let's look at the US yield curve. And before we get into it, just to explain the graphs here in this video, in case you haven't seen them before, but the horizontal grey lines you can see indicate recessions that have taken place in history. And what you can see here is that the yield curve has always preceded a recession in history. So in other words, it's always gone negative below the central zero line before a recession or horizontal grey bar. And this goes all the way back to 1976. And we actually saw the yield curve go negative for the first time recently, back in July 2022. So it's been negative for over 2 years now. And this graph is looking at the spread between the 10-year and 2-year Treasury bond. And you can look at different lengths of time also, such as the 10-year versus the 3-month graph rather than 2 years. And that is even more negative, by the way, compared to this one at minus 1.44 so far in August 2024. And given that the inversion of the yield curve has always preceded a recession in history, this led to a lot of people understandably saying that we've actually been in a recession, with this being exacerbated by the cost of living increases and large inflation that people have experienced, with most people in the US thinking this, according to a poll in May 2024. But the NBER, or National Bureau of Economic Research, hasn't said that the US has been in a recession. And you can see a definition of one here if you want to pause the video and give that a read. But essentially, it takes a wider view of economic activity over a number of months. And we'll see a bit later in this video some positives as to maybe why it doesn't view the US as being in a recession. Let's now take a look at the US jobs data, which came in worse than expected in July 2024, which contributed to some panic and market corrections. In July, the unemployment rate rose by 0.2% to 4.3%, and the number of unemployed people increased by 352,000 to 7.2 million. You can see the rise in unemployment here over a period of time, as this was 3.4% in April 2023 and has risen to 4.3% in July 2024. And if you zoom out and take a look at the unemployment rate over a longer time frame, you can see that this has only ever really increased significantly when there's been a recession, and is followed by a decrease in unemployment sometime after the recession's ended, as there's normally a bit of a lag or a delay with this indicator. And if we move on to how many jobs were added recently in the US, we can see here that in July 2024, jobs added were lower than expected, lower than the 3-month moving average, and below levels seen in 2018 to 2019. US employers created 114,000 jobs in July, which was lower than the expected 175,000 new positions. And the next update for the US jobs market from August will be on September the 6th. Linked with the US employment market, let's now look at the Sahm rule, which was named after the American economist Claudia Sahm, who you can see here, which says that if the average unemployment rate over 3 months is 0.5% higher than the lowest level over the past 12 months or year, then the country is at the beginning of a recession. And this is another metric that we actually hit based on July's data for the United States, because the 3-month average was 4.1%, including July, and the lowest level over the past 12 months was 3.5%, as we saw in the unemployment graph previously. And you can see this Sahm rule recession indicator here, going back to before 1970, with this mostly increasing above zero significantly, which ties in with the recession in the past. And you can just see the increase in 2024 here, above zero, with it not comparing really to levels seen in previous recessions at the moment. Because Sahm herself put out a post on August the 7th, stating that the US still wasn't in a recession, that there were indicators, but it wasn't there yet, and she strengthened the case for the Federal Reserve to cut interest rates, which is almost certain to do in September, as we'll see a bit later in this video. Let's move on now to quite an astonishing graph that goes all the way back to 1901, because you can see here that the US federal government budget is in deficit and has only run a surplus 4 times in the past 50 years, the last of which being in 2001, as you can see here is an anomaly really, but with the US running at a deficit from pretty much the 1970s and 1980s. And let's now take a look at what interest rates might tell us about recessions, because if you zoom out and look at interest rates over a longer time frame, you can see that recessions pretty much always follow interest rate increases that I've indicated here with red arrows, with this graph going all the way back to 1955. And if we zoom in a bit and look at the past 4 recessions that the US has had only, we can see that the interest rates have actually started to come down before the US has technically been in a recession. And more recently, you can see the increase in interest rates that started in 2022, which could mean that a recession follows based on what's happened in history. And when the Fed lowers interest rates soon, this could also mean that a recession follows. But moving on from interest rates now, manufacturing in the US slowed in July 2024, as you can see here through both major PMI indicators, citing lower demand for products due to the current monetary policy we have, e.g. higher interest rates, with PMI here standing for Purchasing Managers Index, just in case you weren't aware. And the US also, like a lot of countries, has an aging population, with 1 in 6 people in the United States being 65 or over, totaling 56 million people, according to the US Census Bureau. And you can see the growth of this over time here. But you can also see this here represented as a percentage of the total population rather than just a number, because people aged 65 years and over as a percentage of the total population has grown nearly 5 times faster than the total US population has in over 100 years. And obviously the economic argument here is that people in this age bracket are less likely to still be part of the workforce and may need more support in terms of resources moving forward. So don't necessarily add to the GDP of a country. And the larger this percentage gets, the harder it gets. And as I've just mentioned it, let's move on to looking at the US GDP, because this remains positive, as you can see here, with it continuing to increase over a period of time, other than during recessions. And you can see the percentage increase here since 2000, which perhaps puts it into better perspective, with this increasing 2.8% in the second quarter of 2024. So surely this is a good sign. Well, yes, it is. But even with this increased GDP, the US still has increased debt. And this graph shows you the total amount of debt that the US has as a percentage of its GDP, with the percentage you can see on the left-hand side here. So back in the 1980s, the amount of US debt increased from about 30% to 50% of US GDP. And if you look at this more recently, this has surpassed 100%. So there is now more debt than GDP, and significantly higher interest payments on this debt in the trillions of dollars. Hence why it needs to continue its debt refinancing, or circle that keeps going round in other words. And this hasn't been below 100%, by the way, since Q4 of 2015. However, having looked at several metrics now, I think it's important to say that indicators aren't always the most accurate or reliable when we're looking at a recession, as they depend on so many factors and things are changing all of the time. For example, the New York Fed's recession probability indicator that you can see here has a large increase for 2024 going into 2025, which is predicting a 68% chance of a US recession at its highest, going down to 55%. Whereas the US Conference Board's Leading Economic Index, or LEI, that you can see here, hasn't signaled a recession ahead for 4 months in a row now, even though its annual growth rate remains negative, indicating that downward pressures on economic activity could be ahead. JP Morgan, though, sees a greater chance of a US recession in 2024, raising their odds from 25% to 35% in an announcement on August the 7th, whereas Goldman Sachs went the other way just over a week later and reduced their odds of a US recession down to 20%. So it's quite fluid and no one can predict this exactly because it is complex. Hence why you get different percentage chances or probabilities by different large institutions and experts in the field. But it's certainly not all doom and gloom, as I covered in my past few videos, and I'll include a few more positives now. Because firstly, US retail sales were actually higher than expected in July 2024, with these predicted to rise by just 0.3%, but which actually rose by 1%. Inflation slowed again in July 2024 also, albeit by just 0.1%, but this is the 4th month in a row that we've seen inflation slow, and standing at 2.9%, it's the lowest that it's been since March 2021, over 3 years ago, and which was the last time that it was under 3%. With CPI, or the Consumer Price Index, increasing by only 0.2% in July, which came in as expected, which is another positive sign for the Fed that inflation is on its way down and that it can start cutting interest rates as expected. Also, most markets and indexes like stock markets, etc., have rebounded and haven't continued lower after a bad start to August 2024, following the US jobs data that we saw a bit earlier, but also after Japan decided to increase interest rates for the second time in 2024. And I did cover this unwinding of Japan's carry trade in a video recently that you can find a link to here and in the description, should you want to check this out. But here's an example through the S&P 500, with the increase in this index since the decrease in July and large dip at the beginning of August, with this still being up 27.1% in the last year at the time of recording this video. And here in the Nasdaq, that again you can see the rebound of recently, with this still being up 32.6% in the past year at the time of recording this video, and with Bitcoin that dropped to below $50,000 on the 5th of August, which was the worst day for markets, but which rebounded afterwards. Although this has been chopping around and been quite volatile, as was expected following the halving. And if you're interested in more of a deep dive on BTC's price and how this is related to previous halvings in terms of when all-time highs and large bull runs have taken place in history, I'll include a link to 2 of these that I did previously up here and in the description of the video for you to check out. And finally, the Fed is almost certain to lower interest rates, according to CME FedWatch, with it estimating a 72.5% chance of a 0.25% decrease and a 27.5% chance of a 0.5% decrease, but pretty much a 100% chance of a decrease in interest rates. But that ends this video looking at whether the United States is likely to head for a recession. And as always, I'd love to know what you think in the comments below about it. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. There are also links to Coinly, Trezor, and to contact Myna in the description of this video also, as I mentioned at the start of the video. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.